Welcome everyone to video 3 of this mini day trading course. So before we get underway, I just want to invite you guys to subscribe to the channel. If you're loving the content, the subscribe button really helps out. Lets us know that I'm doing a good job, and also lets YouTube rank the videos even higher, which helps us out as well. And just quickly, if you haven't seen before, 30-day bootcamp, going to have a link below for people that are starting to take their trading a bit more seriously. But for the guys that want to take it to the next level, I have a day trading mastery program linked below as well. So in the first two videos, what we did is we identified a market leader. I went with Afterpay, the example, and that's what I'll continue to use. And first of all, we had a look at how it reacts to the different time zones during the day. In the second video, we had a look at how it compares to the industry, to other companies within that industry, and to the overall market itself. What we're going to be doing today is having a look at various points of support and resistance for that particular stock. So, as I said, going to be running with Afterpay again on Yahoo Finance, as I always am. And what we want to do is just go out to a 5-year max. We just want to get an overarching view of what's going on with the stock and its price. And what we're trying to identify is key areas where the price struggles to go above a certain point, or it struggles to go below a certain point. So as we can see here, we can see it go up to around that $35 mark, fade down and go to $35 again, or push just above it and go down. So that's what it'd be called resistance. So it's resisting to go above that level. Now, the opposite's true. When it goes down to a certain level, that's called support, because it's supporting it before it's bouncing back up. So with this particular stock, that was sort of last year, and because it's a fast grower and a pretty long way away from where the stock is now, and that's at $38. Kind of note that, but it's not really worth paying a lot of attention to. What we want to do is start to have a look at what's happening right now, and particularly in more recent times. So we just want to go have a horizontal line, and we want to find just groups of pricing where it's kind of bounced off a little bit, and it's going to give us a little bit of information. And because we can do this with only a few bars, because each one of these bars represents 1 week, right? So this is a 5-year time period. So we can see for 1, 2, 3, 4, 5, 6, almost 7 weeks there in the middle. That's 7 weeks worth of data. So that's quite significant when you blow it out into a weekly period. For 7 weeks, it just went between these two price points. So from here, we can see that, weekly, it didn't go below this point, which is $65.18, call it 65. The next part is around that $76 mark, which is pretty close, and then $96 is the next mark. So what this does is it gives us an idea of where the stock might be going into the future. Certainly if it decreased from down here, you'd expect it to go the first point, that $96 mark, which it looks like it's at now. But if it was to break that line, there's no reason we wouldn't expect it to go to $76. It's exactly what happened back over here in this period. It got up to $96, the highest that stock has ever been, and then it decreased back down to this area again. So support and resistance, there's a bit of a psychology in the market, a bit of a self-fulfilling prophecy. Everyone's out there doing these type of lines and looking for this, and they're all going to be trading in a similar kind of way. So we know that these price points are really, really important. So we want to note that down, 65, 76, and 95. And then even up the top here at around that 105. See how it's gone there 3 times, but hasn't really broken above. So that's probably the other one. So now we've got our broader view of what's been happening. It's time to scale it in and have a look in more recent times. So we have a look at a 6-month chart. We can see straight away there's some areas of support and resistance. Again, let's get the horizontal line on here. Doesn't need to be exact to start with. We just want to throw it in where it looks like there could be some information. And then we start to, pick that up a little bit more as we go on. So going through and doing this seems to be approximately around there again. And so what we've got is this really cool bit of information. It's gone up here to that, this looks like $93 mark. Now, each one of these represents 1 day. So it did that for 4 days and then ended up going back down before it finally broke above. And then now it doesn't go below that $93.85 mark. But if we have a look here, once it goes above $62, that was on the 2nd of July. And it traded pretty much between 62 and 76 for a good 2.5 months. So what this means is it's operating in a bit of a chamber. It's just range trading. So just based on this information, we can throw indicators in there, which I'll show you in future videos. But, if the stock price is at 64 and we know that it's been trading between 64 and 76 for the last month, that might be a good sign to get in because it hasn't gone below that period, that stock price for a certain period, and hasn't gone above it. Likewise, you'd sell up here until we eventually get a breakout. And then it goes up to a new high, and then it kind of fades, to stay stable, and then goes up and then breaks. So I'll explain that pattern actually that I've just found here. And it's really interesting getting to know stocks in this detail because what this represents is actually the psychology of the market. It looks like lines on charts and bars on charts, and it is, but it actually represents a consumer behavior. So what happens here is it goes up from June and it goes up to a high of $74. I'm sure that one's 74. And then it goes back down pretty quickly, goes up a little bit, and then sort of nothing happens for this period of time. That's 24th of July, right through to, middle of August. It still doesn't really go above that until 3 to 4 weeks later. So what happens is there's a pattern there. It goes to a new high and then sort of fades away. And then we have a breakout. It breaks out above that and goes to a newer high. Now, what you'll notice is there's much smaller bars during this period. And what that means is that price isn't fluctuating that much. So we have a look at this tiny bar here and look on the left, it opened at $70.61 and closed at $69.81. It's not a big difference compared to this bigger bar, opened at 68 and closed at 73. Quite a phenomenal difference in that pricing. So if we're, new to trading, we generally want to play in these smaller bars where there's less fluctuation, because what this means here is it's consolidating and people in the market are getting, getting their information together, analyzing the stock before it generally breaks out again. You don't want to get on these big bars because it fluctuates, it's highly volatile. You get in here, make money, and then within 2 or 3 days, you're back to break even. We want to be getting into these smaller ones where, we buy here and not much has decreased until we get that breakout. So we can see this pattern happening really well. So it goes to a high, goes back down, and then goes sideways and then breaks out. And let's see if it happens again. Goes to a new high up here and then immediately drops. And then we've got these smaller bars here where it's not really doing anything. It's doing what's called range trading, just going through certain levels. And again, if we get some horizontal lines on there, kind of gives us an idea of where it is going. But keep looking forward. Eventually, it starts to pick up again and move forward, reaches a higher high, and then we're starting to experience that again. Now, it hasn't gone down an awful lot here. It's certainly gone from this high of $105, down to probably about $95. So that's still, a good 10% decrease. So what we're starting to see is there's still really big bars. There's a few little small ones in here. But if the pattern of this stock is anything to go by, we'd be waiting for this section here where it kind of goes sideways for a little bit. Sideways and smaller bars, we haven't really got that because there's a lot bigger bars there. We've also got the US election coming up at the moment, which really impacts the stock market. So that's one point worth noting there. But what we do if we're looking at trading this stock, probably wouldn't get in at the moment. We'd wait for a similar period like this section and this section where the bars are small and people are just deciding what they're doing, and then it breaks out and goes above. Now we can see, again, for a period of time, it's really gone between, we get some lines on here. Looks like it's really gone between 95 and probably 105. So it hasn't been any lower than 95 since 13th of October. And when I'm doing that, that's about 3 weeks ago. And 105 is the highest. So it's kind of range trading. So at the moment, it's trading at $103, right in the middle of no man's land. You wouldn't buy here because you'd expect it to go to 105 and drop. What you'd be trying to do is buy it closer to that 95 mark and having it go up. So that's how you generally do that on a broader time frame. And then what we can do when we're day trading is we can get right down to that smaller time frame. We're going into the days, and we'll put this into, it's up to you, a 5 or 15-minute chart. And each time this changes color, it's a new day. Actually, just double checking that. Oh, no, it just changes color randomly. So from 3rd to the 4th. So what we want to identify here is just key areas that give us previous days high. So if we go here, and this one will draw in, so it doesn't, doesn't really impact this much. So if we have a look here on the 4th starting at this point here, the highest point is there. that the stock goes to. So I draw that across for the next few days, just to give us an idea. And then the lowest point was down here. So it's just giving us a bit of information around potential support and resistant areas for that day. So you can see this one's actually a gap in the market. It's gone up and opened significantly higher, again, probably due to the election. And then it hasn't really gone down those levels. So they're not particularly tested. So what you do is you go through and do that, through a period of time. If we have a look here on the second opens up and it goes high quickly. And we want to push that across to the next day. And we can see that it starts to act as a support right here. So this is the highest point that it goes on the 2nd of November. It goes there twice before breaking down, opens up as a gap, but then this becomes a key area of support. It goes down to the previous day's high. So you'd be looking to buy in when it hits there or around about, and then, you're going upwards after that. So that's how you'd break it down, looking at various key points of support and resistance for this stock. And as you can see, you're starting to identify, how this stock really, really moves. So when you're doing this, you want to specialize in just a few, particularly when you're starting, because you get to understand these nuances. You get to understand these certain price points, how they react. Earlier on, we've seen that it goes up and makes a higher high, then it'll go down, and then they'll be really quiet for a period of time where everyone's working it out. And then it's going to break out and go above that price point again. And we can see this clearly here, right? So it's going up to a higher point, breaks down, not a lot, sort of downtrend here, and then we start to get a bit more momentum. So that's trading for Afterpay. As I said at the top of the video, check out the bootcamp below if you're looking to start to take trading a bit more seriously. But if you've been trading for a bit and time to up it and take it to a side income, you can check out our day trading mastery program. Keep an eye out for video number 4 in this day trading introduction series. Catch you later, guys.